joining Ryan Hayes, who is co-chair. And one of the objectives that we received from surveys of members is that they wanted more content for loan originators specifically. And so Ryan had a great idea and brought it to the table to have a series of 6 presentations every single year for mortgage loan originators to help educate and inform about the lending industry and changes and what's going on. And so for today, we wanted to start off with a top strategies for originators presentation, followed by a panel discussion with 3 local originators that are unique and top in the industry for some of the things they do to be successful. I'm going to share my screen, and Brian's going to provide a message from our sponsor for today.
So this is great. We get to actually practice our messages from sponsors. I can practice my podcast ad read now. But in all seriousness, Chris Law has been a corporate sponsor for the MMBA for a very long time. I know a lot of people that are currently in this room and on this webinar have used Scott's services before. I've got a little message from him, but remember, he is certainly somebody that has been an advocate for us in terms of providing education. So as many of you know, Chris Law and Atlantic Law has been an MBA corporate title and closing sponsor for a long time. Aside from serving in that role for over a decade, folks at Chris Law want to make sure that you're aware of their commitment to provide the industry's best service and pricing, along with a commitment to partnering with lenders like yourself in any initiatives that you may help want to grow your pipelines. They offer these opportunities in 50 states with a focus on New England. To learn more what Chris Law and Atlantic does to help assist its clients, please reach out to Scott at chrislawatlantic.com. So thank you for Scott for being a sponsor here. And as Greg said off the top, we really want to try to provide more value to the originators in the state of Massachusetts. The MMBA does a ton of great work behind the scenes on legislative, I know compliance, operations, really take advantage of it, but we really want to try to bump up the engagement for loan officers inside of the MMBA. I think this really came to light for us with the LLPA changes. That was sort of the first time we got a lot of loan officers reaching out, asking what can we do? What can we do to help stave off some of these changes? What's the MMBA doing to help? So, that's where we started with this program. And we're looking forward to continuing to have more value for loan originators through the Mass Mortgage Bankers Association.
Thank you, Ryan. And so today we're going to talk about some top originators and how they're successful and what they do to be successful. I'm going to start off by providing you some insights we gained from a recent survey that MGIC conducted. They surveyed loan originators that are top producers across the country to gain insight as to what's working before we get into the panel discussion about what's working here locally. As always, I start with a disclaimer that'll tell you the opinions I'm going to provide today are of my own. They don't necessarily represent the views of MGIC. That out of the way, the survey was conducted back in June of 2022. We're actually started the 2023 survey now, so you may have already gotten an email requesting you to participate. If you did, we welcome the more the merrier. But back, if you remember, about a year ago, we had months of surging interest rates, rising inflation, and a whole bunch of trends that affected affordability for home buyers. Very similar to what we're facing today. Over 1,600 originators responded to the survey, and they skewed toward seasoned loan officers. About 42% were mortgage bankers. Over half had over 21 years of experience in the business. The majority of them were over the age of 50. And they worked for all types of companies of all sizes, probably a lot like the audience we have here today. The survey was broken into several sections. The first was tailored towards finding out how originators are marketing to their customers and how they're working with their customers. And there were some interesting pieces of information that we were able to glean from it. It's probably not going to come as a surprise to any of you that the top area of focus for the originators responding was purchase transactions, both for first-time home buyers as well as move-up buyers. Newer originators, those with 5 years experience or less, tended to focus more on first-time home buyers than move-up buyers, probably because they have a smaller list of previous clients who may be ready to move up into that new home. Most in the housing industry recognize there's work to be done in reaching out to underserved markets, addressing racial equity issues, and most LOs said that their companies focused on affordable lending products and programs with some efforts in other areas. So what efforts you or your companies are making in this area, we'd certainly love to know about at the MMBA. We'd certainly love to spotlight and provide additional information if we can. Anything you don't see represented in this graph, anything you'd like to be doing but are finding difficult, please reach out. We'd love to assist. Now, while 31% of loan officers told us that social media is a successful marketing medium, 25% said that they never use social media for business at all. And those who do, they listed it as the big three as the most effective platforms. Facebook, most used. Social media appears to be less popular with experienced originators and more popular with newer originators. I don't think that comes as a surprise to anybody. You know, the adage, you can't teach an old dog new tricks, but old dogs are always learning. So, does this track with your social media experience? Are you satisfied with your social media presence? Some of the panelists today are going to talk about things that they're doing in their markets. The next section of the survey focused on challenges that borrowers are facing and how the loan officer deals with the biggest challenges, down payment specifically. The vast majority of LOs originated at least some loans with low down payments and for those LOs on average, over half their loans involve down payments of less than 20%. As we all know, there are many products available to help borrowers meet that down payment challenge. Which ones are the LOs using the most? Pretty interesting to see what's out there. Happily for me, a conventional loan with PMI is the most popular solution for most LOs. In addition to these options, some LOs mentioned portfolio and non-QM products as solutions for borrowers who have a need to put less money down. And when we asked originators how they decide what solutions to suggest to their borrowers, most of them said that they analyze the credit, the income, the goals, and then they take their borrowers through the options. So I'm guessing that most of all you do the same thing. Survey then moved on, focused on a crucial aspect of success for originators, fostering relationships with referral partners. 87% of the LOs we surveyed said that realtors or real estate agents are their best source for generating referrals. And we asked some specific questions about how LOs build those crucial real estate relationships. And we'll get to those insights in just a minute. Interestingly, originators who've been in the business for 30 or more years were more likely to include financial advisors and CPAs as a top referral source. They selected financial advisors 34% of the time versus 26% for the group overall. This might be a tip for some of the newer LOs not to overlook this referral source. Matter of fact, at the end of this presentation, I'm going to show you a special website that we created just to give you guides on how to do that. So let's talk about real estate agents, the top referral source. How do you build those relationships? Well, 65% of all loan officers make referrals to earn referrals. This makes sense. If you refer a customer to them, they're more likely to refer their own buyers to you. But don't make indiscriminate recommendations just to get your foot in the door. If your borrowers have a bad experience with a real estate agent, it's not going to reflect well on you. A strong referral relationship, the reputation of both parties is crucial. And a borrower has a great experience overall, are going to be more likely to recommend everybody involved. Events are another thing that's still popular. Many loan officers said they specifically host educational events, especially training for new agents. Hopefully some of you have found success with training and education. Other things included social media to connect with them, as well as lunch and learns, and social events such as happy hours. When asked what loan officer feels provides the most value to real estate agents, you can see service and availability is absolutely mandatory for maintaining those important relationships. Successful LOs know that they always need to pick up the phone for referral partners and be the resource that they need. We talked to one realtor at a recent presentation, and she mentioned that a loan officer will always get an opportunity to come in and talk, but generally it was the 7th, 8th, 9th meeting with that loan officer before a referral would be made. So if you're new to this business and looking to get in with a realtor, don't assume that a first or second meeting is going to be a lifelong friendship. It's just the path to begin. Lastly, the survey concentrated on the challenge that LOs faced in 2022 and their plans for 2023. It's been a tough year to be an LO, and it's easy to see why. Was there anything else that was particularly challenging in 2022 or 2023 so far this year for you? You can certainly ask a question in the chat for our panel. When it comes to the top drain on time for LOs, they're split between two activities: generating new leads and managing their pipeline. Unfortunately, that pipeline a lot of time is full of pre-approvals with borrowers searching for properties. But the top answer wasn't unanimous across institution types. Brokers and mortgage bankers spend more time on lead generation, where the loan officers at banks, community banks, and credit unions spend more time managing their pipeline. And as for delays in the pipeline, receiving documentations and appraisals are still the largest roadblocks for many. But it's worth noting that 32% of all respondents said that delays aren't an issue for them. So we asked LOs about their business goals. We saw a wide variety of answers, but a few trends certainly emerged. We were also curious about how LOs continually develop their skills to help reach their goals, and everybody learns in different ways. So their answers truly ran the gamut. Hopefully, this information has helped you a little bit. We will provide a copy of the recording as well as the slides afterward. And I wanted to share, as I mentioned earlier, a web page that MGIC created just for loan officers. It's called the Loan Officer Hub, and we have the content from our survey there. We built it just for loan officers. We always add new blog posts, podcasts, tools, infographics. And much like our survey, we focus on strategies related to referral partners, consumers, and marketing. It's easy to remember. It's just loanofficerhub.com. And while you're there, you can subscribe and you'll be notified anytime a new document is added. So I'm going to stop sharing and bring back Ryan to introduce our three panelists for today. Talk a little bit about what makes them successful.
I am going to bring up Jason Factor, Meg Kenyon, and Brian Brown to the stage here. And, you know, Greg, the slides are fantastic. They give us a great idea of sort of where to start, you know, on some of these conversations. But we thought it was important here to bring up real loan officers operating in this market, which is a tough market right now, to find out exactly what is some of the successes that they have here. So my name's Ryan Hayes. I'm from Movement Mortgage. I'm a regional director here. I am the incoming chair behind Greg Korn at the Massachusetts Mortgage Bankers Association. And I've been involved in mortgage banking for a long time, you know, with capital markets, operations, sales experience, both here at Movement, but we were previously at Mortgage Network, Salem 5, and Leader Bank. So I'm happy to have everybody up here today. And what we're going to hopefully dive into is talking a little bit about some of the strategies that are working in what is probably one of the toughest seasons that we've ever experienced. And I think it's okay to acknowledge that. I think it's okay to acknowledge that this is going to be one of the toughest markets that we've ever had. And everyone that's on this call here today is doing something to try to help their business. And I can accurately say with a wide view of what's going on in the mortgage world across this country that you're probably doing better than you think you are. And hopefully everyone can take that message this morning, take a few tidbits from these successful loan officers and bring that to your business. So what I'd like to do is first go around the horn here and get our panelists to introduce themselves, and then we'll dive into some of the questions. So Brian, why don't we start with you?
All right, yeah. Thank you very much for having me on. So Brian Brown, Guaranteed Rate. I've been in the mortgage industry for 20 years, and I've been with GR since 2012. I'm out of Hopkinton, have 3 kids under 8, so that keeps me pretty busy when I'm not out there writing loans.
And how about you, Jason?
Jason Factor with Movement Mortgage, and September will be my 9th year in the business. Started at Mortgage Network, now at Movement. So I've been on the LO side my entire career. Before that, I was in nonprofit fundraising. So this was kind of a second career for me, and hopefully took some of the tangential lessons from my previous life into this. Also have 3 kids, 9, 6, and 4. So they also keep me very busy living on the South Shore.
And Meg.
Good morning, everybody. Meg Kenyon, Vice President Branch Manager with Norcom Mortgage. I would say I've been in this industry, I think about 6, going on my 7th year, and actually just 3 months in from going from the banking side of lending to the mortgage company side of lending. So, taking that step into that pool. I currently work out of Attleboro, Massachusetts, reside in Woonsocket, Rhode Island, fulfilling that, perpetuating that once a Rhode Islander, always a Rhode Islander.
That's fantastic. So I want to reach back into the slides to get us started on this conversation here. Obviously, not surprising to anybody on this call, #1 source of referrals from the slides from the top originators was realtors. I know realtors are they are a necessary part of our business. Sometimes I think they get an outsized portion of the amount of effort and energy and engagement that we have. But I think it's important to talk about them to start with. And Brian, I want to throw this to you to start here, because I know you're doing some unique things with realtors other than just sort of dropping off lunches and trying to provide some of that services. So if you could touch on some of those things that you're finding successful with realtor engagement.
Yeah, all right, awesome. So one of the things that we started doing recently, and please steal this idea, feel free to reach out to me to get more detail on this, because I only have so much time here. But we started, my team, we organize and actually run the broker tours in Hopkinton. All right. So if you are unaware of what a broker tour is, the realtors in your network do. Basically, it's, you have a group of open houses that are just for realtors, right? So this was a thing that was going on in our town before COVID. After COVID, we lost it, probably like most towns out there. The reality is the agents want it though, right? They did it before and they wanted it again. We reached out to we surveyed a handful of agents in the market in Hopkinton, and they were like,
"Oh, sorry, I didn't open the door."
All right, they were like, "Oh yeah, if we can get this thing back, let's do it." The best part about it is that none of them want to organize it. So this is where we stepped up and we said, "All right, fine, we'll organize it." Right. So on my team, we try to do events that are low cost, highly effective, highly efficient. Right now, I don't have to tell you, but every dollar, you got to manage every single dollar that you have. So we love this idea because it's consistent. The broker tour day is in Hopkinton every Tuesday. And we are at the point of the first time we reached out, there was one of the agents had an open house, a broker open house. We reached out to him and said, "Hey, can we put this on tour?" And then all I did was I literally sat and called every single agent in Hopkinton that had an open house and said, "Hey, do you want this on the broker tour?" And they said, "Absolutely. Why wouldn't we do this?" And within like hours, I had 7 houses on broker tour for the next Tuesday. We lost a couple because their offers got accepted and that whole thing. but it was fine. We ended up with, it was either 5 or 6 that we ended up with the first week that we started doing this. Now, here's why I love this idea, okay, is that it's hard to, coordinating it is tricky, which is why none of the realtors are going to do it, which is where you step in, right? The best part about it is you are always looking for a reason to call realtors. They do not want more coffee meetings. Trust me, ask any one of them. They don't want to have more coffee meetings with you. But if you can call and say, hey, listen, I saw you have an open house at 123 Main Street. I'm running the broker tours in town now. Do you want this one on tour? They're gonna say, absolutely. If it doesn't go off the market over the weekend, I'd love to put this one on tour. Why wouldn't they? They're making their seller happy by putting this house on tour.
Kind of. It'll be done when I bring it up.
We did that the first week. It was a crazy success. They loved it. And now what's happening is we've done this like 2 or 3 times since. Now what ends up happening is the realtors reach out to us and they say, hey, I have a house that I want on broker tour next week. Can you put this one on? And so they're at the point now where they're reaching out to us. And again, a few reasons why I love this. It's low cost. So think about this, right? People are constantly reaching out to us to sponsor everything. And this idea, you don't have to. You can if you want to. You want to sponsor lunch, go ahead. But bring in your partners, right? Bring in your attorneys to sponsor. Like we had 6 on. So it goes from 10 in the morning to like 2 in the afternoon. Bring in a sponsor to do coffee and donuts at the first one. Bring in a sponsor. So I had my attorney, and then we had a builder. A mover. Then we had an inspector. So you could spread the wealth around. And we're at the point now where you remember these things are every week, right? So you can set it up so you have a sponsor weeks in advance, so that it takes that coordination off your plate. So it could be low cost. It's highly effective, meaning you get hours with your agents bouncing around. We literally bounce around. I plug a team member in at every open house. And then I, as the team leader, bounce around to the different open houses, and you're seeing the same people over and over. You're talking about it. You're taking pictures. You're posting all these houses on social media. Follow my social media. You'll see this from the last couple of weeks. All right. And then the last is that it's highly efficient, meaning you're in and out in like 3 hours. And you spent every Tuesday, in my case, with 30 plus realtors consistently. I think one of Greg's stats was you got to meet 7 or 8 times with somebody before you start getting business. You're doing this by accident every Tuesday. In my case, you will get the business. We've already seen business come in from it that we normally wouldn't have had. All right. So that's the idea. Sorry.
I love this, Brian, because one of the things that we always ask is how we can actually provide value to our partners. And like you said, just digging in for more meetings, especially right now where there's not a ton going on. You're talking about sort of the same interest rates, same programs, that kind of stuff. What can you do to provide value to that? And for realtors, unfortunately, the biggest value to them is giving them listings, right? It's hard to do that. Inventory is really tight. So what can you do to provide value? I love that idea. I love what you're doing, with those referral partners. And I love how you're bringing in the movers and the attorneys and things like that too. Those are all part of your network outside of the realtor partners that give you referrals.
Well, that's the thing. And they love it too, right? It's exposure for them. Like, don't think your inspectors are hurting, right? Your attorneys are hurting, and we're all hurt. It's tough, right? It's a freaking grind. And, they need at-bats. They need opportunities. If you could put your inspector in an open house where he or she's going to meet 30 people, 30 agents, that's a home run. Are they going to be willing to spend $50 to $100 to sponsor a lot? Hell yeah. And if they don't, they're probably not the inspector you want in your network. Same with the attorney, same with the insurance person, right? I mean, think about all the people that we refer business to every day that can help, that you can partner with. And the best part is you can schedule it. It's all, your town has a broker tour. I guarantee if you start looking into it, they have a set day that they do broker tours, right? Start looking into it. You'll find it and just run it. Don't wait. Don't get anyone's approval. Just start doing it, and you'll find that they'll just all pile on and they'll start doing it, right?
Absolutely fantastic. One of the other things that I'm not so great at, but came up into the presentation is social media. And I see some people that are very, very good at it. And I see some people who have sort of the standard, LinkedIn post, happy Flag Day, right? I mean, that's, and you see it 8 times in a row from the same, large independent mortgage bankers. And we're all kind of, guilty of that from time to time. One of the reasons why I was really excited that Meg was on here is because Meg has done a great job of getting away from that sort of canned social media and developing something in which I think connects with people and connects with her partners a lot more, which is a mix of both business and personal inside of your social media accounts. Again, something I'm not great at, Meg. So I'd love to sort of hear your take, how it's evolved for you. And then sort of from there, how do you think that drives business into your network?
Thank you, Ryan. First of all, again, thank you for letting me be on this panel. I think, like many people on here who have dabbled in social media, I really think that, COVID, there was nothing else to do. There was no ability to do things face to face, couldn't even see your own colleagues. So for me anyways, probably end of 2020, early 2021 was when I was like, listen, I have this, for the most part, free resource, and why not use it? And it is a delicate balance between, yes, you want to provide information about what you do, what you have, and how you can help, but also letting people know that, what makes you stand out, what niches, if anything, do you have? So there is a nice tightrope balance, if you will, of, letting people know who you are as a person, as a human being, as well as what makes you stand out in the lending industry. So things that, are important to me is, again, especially after the pandemic, is getting out in the community, letting people know, like, hey, I am getting back out there. I'm trying to find ways to participate in community events, help my communities and be there for them to provide educational resources and when available sponsorships. So everyone on this call has something, a community or a culture that they're a part of. Me, I'm part of the LGBTQ community. Some people may be a part of a sports club. Some people may be a part of a game club. Some people may be part of chambers. Getting back into those networking events, if you haven't, is huge. FaceTime is huge. And as people have been saying, as Brian said, it's rough out there, but it's come up before we got on this panel. It's come up days before. We can only control what we can control. And what we can control is how we're getting out there and how we're letting people know. And social media is a great platform for that. I use social media to let people know, hey, I am sponsoring this LGBTQ entrepreneurship group tonight. Hey, I am doing Food Truck Friday at Roger Williams Park Zoo. Come visit us, scan our QR code, see if you'll win the prize at the end of the season, have a chat about us, about the first-time home buyer programs that we have out there. Hey, another thing I'm getting into now that I'm stepping into this role at Norcom is a member benefits program of getting into actual community employers, looking at the communities where your brick and mortars are, what businesses are there that provide a lot of employment, and saying, hey, I am part of this community. I work out of this community. I would love to come in and provide educational resources for your employees, financial wellness programs, as well as a little bit of a perk, whatever that may be from your company, to provide that. And all those things go on social media. So yes, we have the programs. Yes, we have this, but also what is it that you're doing? What makes you interesting, I think, is what creates a successful social media platform.
I think that's such a good point, because I do think social media sometimes has become something that you just stand behind. And Meg, until you just said it there, I think what really resonated with me about your presence on there is you're right. It's showing you out in the community a lot, right? It's not just information out there. I think, look, it's, you know, it was a strange couple of years with COVID and people not really gathering. People really want that face-to-face engagement. I think social is a great way to show what you're doing for that engagement, allow people to get involved in the things that you're doing. And I think, Meg, what you said about just looking into what you're involved in your networks and being able to dig into that is important. Again, I think people get really hung up on just going to visit the most successful realtors and forget about, you know, whether it's church organizations, whether it's civil organizations that they're involved in, whether it's volunteering. Everyone has something and everyone has a passion. And I think more and more we're seeing consumers and realtors being driven to want to work with partners who are involved in that, or maybe involved in the same things that they're involved in. So I think that's fantastic. One of the other pieces in the slide here is talking about professional development, and you know, it's talking with peers is one of the highest pieces here, but podcasts was on there as well. And I wanted to bring Jason up here. Jason, you've done a really great job here of engaging not only with education, but bringing in and utilizing some value for your partners as well. You do a great job with your podcast and your videos. Can you talk us through a little bit how that started, how it's evolved, and sort of how that's providing value to your business?
Yeah, I'd be happy to. Thank you for having me. This is awesome. Thank you, Meg and Brian. Pretty much everything that you guys have said is part of what went into the creation of this. And I should back up. My podcast, Finance with Factor, which you guys can check out my social media feeds and see some clips from. More than welcome to go listen to it if you really want to. But the idea really started with someone said, oh, we can't go meet realtors for lunch anymore, so grab lunch with them over Zoom. And I was like, that's disgusting. Nobody wants to sit there in front of their computer and eat lunch with me. And so it sort of evolved into a Facebook Live thing. People were home, people would tune in, they would just watch us chat about the market or what was going on. And it was fine, but I wanted to kind of twist it a little bit more. And I sat down, I kind of thought about my strategy for social media, which, like Meg, has always been to provide personality as much as anything. I think that the canned stuff that goes out over social media is a little bit too canned. I mean, any one of us could put out the exact same post and it's not recognizable or memorable in any way. So my strategy has always been to provide personality and value. And this was a way for me to do that, similar to what Brian said, at very little cost. I essentially record a Zoom session just like this, where I pick a different topic every week. I have one posting tomorrow, so every Wednesday they go out. It's always a different topic, and we just chat about something relative to the market. So, you know, I've spoken with mayoral candidates about building their network. I've spoken with CPAs about tax reform laws and estate planning. Realtors about negotiation tactics. And I personally have never directly received a referral because I did a podcast. So I've never put this out on social media and someone called me and said, hey, Jason, I want to work with you as my mortgage person because I saw this podcast about, you know, building a local park in our community. Like, no one's ever done that, but that wasn't ever the goal. So the goal wasn't to promote me. The goal was really to promote my partners and make them the experts and then just grift off of them by learning something new every week that I find interesting. And I have had partners. So I had a divorce attorney once that was on, and we spoke about mediation and just how to navigate two sides that are arguing with each other. I learned a lot. That person got a call, called me back and said, someone called me and said they called me because they heard the podcast and thought that I would be a good fit for them. And they had some questions, and that's turned into a relationship and a referral to them. So to Brian's point of like, how do we provide value? That was me being able to provide value. I could have sat in my car and done the ABCs of mortgage lending and, you know, A stands for abatement and whatever, right? Like I could have done that 26 times and put that out each week, every year, or throughout the year. But for me, this was a way to provide value to my realtor partners, to my people within my network, and even past clients, to promote them. And if that pays itself forward in the end, great. If not, at least I got quote unquote free content to put out there and a little bit of FaceTime with someone.
I think it's been absolutely brilliant, Jason. I think the providing value to your partners is something that will always make you stand out. And you guys should go out and check out Jason's what he does, see how he does it, because again, it's mayoral candidates, it's CPAs, it's sometimes not talking about mortgages whatsoever, sometimes talking about the real estate industry and what's going on inside the mortgage business. So it's a great mix going back and forth. But I think, Jason's capturing a handful of things here. One is value to his partners, but two is he's got a whole network of clients that he's, been their financial advisor and their mortgage lender for. And now that's another way to keep them engaged post-transaction, something that he can provide and continue to provide value. So I think, that leads me into sort of the next piece, and I'm going to open it up to all of you guys here and see what your thoughts are. But we have now been in a higher rate environment for a while, and we are focused on where that next deal is going to come from in that next purchase deal. But eventually here, rates are going to come down or at least settle a little bit. And we're going to have some ability to go back into these people for some refinances. And so I guess what I want to do is open it up to the three of you and ask you, how are you keeping your customers engaged, right? What strategies are you using to keep past customers who may have closed on a purchase home over the last couple of years engaged? And if you've got anything that's a little bit outside the box, that would be great.
I'll go first because I'm the only one unmuted, so I'll go. So I think first is every time we close a purchase, every single time we say we're going to watch the market for you, and we will call you likely before you ever know that interest rates are going to come down. I tell all my clients that I'm going to start calling you at when rates drop 0.25%. You don't have to do anything, but I'm going to be the one that's actually going to reach out to you, and we can keep track of it. If you want to move it 0.25%, great. If you want to wait until things drop further, that's excellent too. I throw out there that we have free refinance options, right? With cost, without cost. So they hear it, that we can do lender credits for closing costs, which obviously you guys all can as well. So, I think if you're planting that seed at the time of purchase, if you're not, you're missing the boat completely. You have to be, because they will call somebody and it'll likely be the person that was in touch with them last, if that's you or not. I think the other thing that we're doing is we track everything. So we track every single loan that we lost and why we lost it. And if we lost to another lender that was whatever, 0.5% lower for whatever reason, we track that so that I know where their rate was when they closed. So even if I didn't get the purchase, I'm going to get your refi. And so it's tracking your wins, but closings, but also tracking the deals that you didn't get as well. So that's just a couple of ways we're doing it on our team.
Past clients, being able to work your database, that stuff's really important. I love that idea, Brian, and I know we've got some people that do similar things. Hey, we've got a strike rate here. When we get to that strike rate, you're going to hear from me. And this is not something, even if you hadn't set this up before, go back and send out, a blast to your previous customers. Tell them where the market is now. Talk about how you just reviewed their financial situation. And,
right.
and this is what you're giving them. You can be able to pull some of that stuff together to make it feel like that you're really looking out for those customers, so that when the time comes, when on the front of USA Today or the NBC Nightly News, they hear the Fed cut rates, right? Because that's all they hear. They're not going to go, oh, maybe I should go looking for that. They're going to say, hey, that email that just came from Jason or Meg or Brian, now I know I should get back to them and see where we're at.
Right. Yeah, it's just, Gary Keller has a famous quote, right? To realtors, don't be their realtor, be their economist. And in our world, it's the same thing, right? You could spend your entire day today calling past clients and explaining the economics of why, when inflation drops, rates drop, or when we go into a recession, why rates will drop, right? And that's great information for them to know. And you're not really selling anything. You're just being their economist. So I think if you haven't been having those consistent conversations, like start today and just start those calls. Because you're right. By the time they see the news, somebody's already been in touch with them, likely a competitor.
Yeah, I 100% agree with everything Brian and Ryan have said and piggyback all that. And, it keeps coming up time and time again, whether it's face-to-face or social media or, email blasts, like touch points. It takes you about what you said, 6-7 times to make a touch point with a realtor to finally get their attention. Okay. I think the same thing, you follow that same guideline with clients. Don't let the closing day be the last time they hear from you. I feel like CRM platforms are very important for that. And I think sometimes that word CRM is overused, but these systems are so powerful. So making sure that your institution invests in something like that, because when used appropriately, it's helpful to make some of these things personal yet automatic to focus on the things that are face to face. Set a 3 or 6 month reminder to touch base with that first time home buyer. Hey, how's everything looking? How's making that house your home? Or, if you close a construction loan, checking in again, hey, how's that construction? Send me pictures. I'd love to see, what the garage looks like. It's staying in touch and, not only on a personal level, but as Brian said, informational level, letting them know, hey, I'm keeping an eye out for you. I think that's huge. I think it's key.
Meg, you brought up a great point there in terms of CRM. And it's funny because some institutions do a really good job of putting a CRM solution together, and some institutions haven't. I mean, even just going back to Mortgage Network, where we were 6 or 8 months ago, we didn't really have an enterprise solution. Here at Movement, we do. I think that this is a great spot to talk about investing in your own business, right? And look, an institution may have a CRM system. It may or may not fit what you're trying to do. It may or may not fit your goals. To me, that is a great investment into your own business. It's going to be able to drive, and things like Brian talked about in terms of driving, hey, what are the deals I missed and why I missed them? What are the clients, where they are, making sure you can keep track of leads that come in, especially now as pre-approvals are taking such a long time for them to buy homes, and making sure you have constant touch points. A lot of times I hear loan officers talk a little bit about, well, my institution's, CRM is not that great and that sort of stuff. I encourage everyone here, if you're not utilizing a CRM solution, to invest in a CRM solution, whether it's your enterprise institution one, or whether it's something you go out and do for yourself. And we certainly have people on this call that can help you with that, but also, we can reach out and connect you with people that are using all types of different solutions to get that done. But all that does for you is continue to put forth communication, continue to stay relevant in terms of the other pieces, whether it's realtors, that's great, but the other pieces of your business. Past clients on Greg's presentation was the number 2 source of referrals, right? How do we stay in front of them? Going, staying on that sort of where do my referrals come from piece here. I was astonished at the survey in terms of how many people are not utilizing someone outside of clients, past clients and realtors to drive their business. I mean, financial advisors, CPAs, builders, lawyers, like these are the types of value providers that are really going to drive business to you, and actually something that you can give to them as well. So Jason, what are you doing now to make sure that you're hitting on all of those, non-traditional ways to drive business in what is a tough year?
Yeah, for me, my business, I mentioned before I was in lending, I was in fundraising. So I actually came in with a very deepish pocket of people that entrusted me with philanthropy. So I knew a lot of financial advisors, I knew divorce attorneys, I knew people like that. And that was really where my business started, much more so than on the realtor side. They introduced me to realtors over time, and I certainly met people through that. But for me, financial advisors were always a key person in the transaction. I try to loop them into as many conversations as I can throughout the process. So even on an introductory call, I will mention, do you work with a financial advisor or a financial planner? Is that someone that you want to involve in this conversation? And I try to loop them in right from the beginning. And if you can do that, sometimes that's a value add for them. If they don't have one, well, now you know a way you can add value because you can make an introduction. And that, it's tough because I was shocked to see that Greg's slide says that referrals are the way that most people get business because, the salmon of Capistrano only swim one way upstream. So it's hard to really send stuff up the river all the time to realtors. You can get creative and do podcasts and tours and network in local community groups and try to build those relationships. But the reality is, if I have 5 a year that I can send, that's a lot. Whereas a financial advisor is fairly easy for me. I mean, I probably send a couple a month to various financial advisors that I think would be a good fit for that particular client, particularly first-time home buyers or people that call me, hey, we grew out of our house. These are easy conversations to have that don't feel as salesy, for the lack of a better word.
Yeah, that's absolutely fantastic. And, people should really think about who is in their network and how they can provide value to those people right now. Because like a few times we mentioned on here, this is a tough year for a lot of the tangential industries that represent, pieces around the mortgage business as well. So the more that we can drive there, and then there are other value providers that are having a pretty good year. And to them, being able to continue to provide that value is just going to keep you front of mind and drive customers your way. We sort of started off this conversation talking a little bit about, it's a tough market and you're probably doing better than you think you are. One of the most surprising statistics was from a friend of mine at the commissioner's office, which was about 50% of the originators that were licensed in Massachusetts last year did not reapply for licensure, meaning 50% of the competition that you had in the state of Massachusetts disappeared year over year. And it probably will be another 25% this year. The people that are on this call, the people that are doing business, are the professionals in this industry, right? And those are the ones that you want to continue to lean on. Look, we are competitors, but we are all in this together, and we want to make sure that we rely on each other for information. And talking to peers was one of the biggest sort of professional development pieces in the presentation. And Brian, I know you're doing some stuff with some mastermind groups, if you want to talk about that a little bit, but I want to encourage everybody here to make sure that you're part of a group that's just bigger than yourself, right? It can be tough on days when you're dealing with 8 pre-approvals and all of them have lost out on, their bidding wars, for the day, or you go through a day and the phone doesn't pick up. And, sometimes you're locked in your attic or in your master bedroom, or you're in your office, but you're the only one there. So it's important to draw on on this community that we have here to lift us all up. So Brian, I'd love to hear sort of what you're doing with that.
Yeah, for the masterminds, I will in 1 second. I want to go back to something you said, right? I think the people that are going to succeed in this market are the people that have the right mindset and the people that implement, right? You take realtors, right? And, if there's one on this call, I apologize, but realtors are the most trained people on the planet. I swear to God, they get more training than surgeons, right? And the only difference between the ones, it's the same thing. I've been doing this I've been in more realtor meetings for 20 years than I can't even count. And the only difference is the people that implement and the people that don't. right? I mean, I swear to God, there's only so much, even this call right here, there's a lot of good ideas. I'm willing to share my broker tour idea, because I know 90% of you aren't going to implement, right? I hate saying that. I don't mean to sound like a jerk, but it's the reality of human nature and what separates, the people that are successful and the people that aren't. You take a good idea. Any idea is a good idea if you do it consistently, and you put everything you have behind it, right? And that brings me to the mastermind idea. So mastermind is, I threw one a couple months ago. We had 150 people. I invited somewhere close to 1,000. I got 150 people. This was not just realtors. It was realtors and small business, but it was, predominantly real estate. I'd say 50-60% real estate heavy. And I did panel sessions. I did breakout sessions similar to this, but it was in person, and it was great. And it wasn't just, we had guy up there talking about AI, and, so he was kind of ahead of the curve on that. And, just a bunch of different topics that could relate to real estate. And the reason that kind of ties into, the whole mindset thing is that I know that most loan officers are not going to do this right now, right? Number one, it's expensive. It's crazy expensive. It's like throwing a wedding. But the reality is, like, I got a new real estate office from it, right? That I never would have had. They all showed up as a group. They used it as like an event that they could do together. And it was phenomenal. I have a new relationship that I never would have had if it wasn't for that. That's already paid dividends. So I know over time I'll be repaid, but the amount of phone calls and texts and everything I had to do to get 150 people to show up was a ton of work that I never would have done before if I didn't have this event. If you put your back against the wall and you throw a massive event like this, you have no option but to get people to fill those seats. And it's amazing what you'll do, what you'll accomplish in a day when your back's up against the wall and you have a major event that you're going to spend, 4 or 5 figures on 30 days from now, and you don't have half the room full yet. It's amazing what you'll accomplish, right? So I encourage you to spend, because a lot of people won't in this situation, and maybe tightening up is the right thing to do, but I've always been a guy that's going to go the other direction. And if the rest of the industry is tightening up, I'm going to spend money because I know you won't. And you got to outwork it, right? It's that mindset. It's that whole Carol Lawson thing. My team, I say this to my team ad nauseum. If you don't know who Carol Lawson is, Google Carol Lawson, Duke. She's a Duke basketball coach, and she has a famous speech. I love it. I watch it all the time. It says, don't wait for things to get easier. Figure out how to do hard better. Right. And I said this at my mastermind. I think Greg was there. Right. So do hard better. Like, we are all waiting for interest rates to get better. But what if they don't? Are you just going to keep waiting? Right. So figure out how to do hard better. And doing hard better is doing an event, a huge event that makes you crazy uncomfortable and is scary. Do that, and you'll see what how much you're capable of accomplishing. So I'll get off my soapbox, but that's my mastermind event. We have another one planned for a month from now that I'm really excited about.
I love that. And Brian, you're doing this on a large scale, but to me, that's something you can implement, inside your town. You can do it with the partners that you have right now. You can do it with a handful of loan officers you used to work with. You can do it with loan officers that are in your own company that may be in different parts of the country that have different perspective. You can, if you're in the first 5 years of your business, you can do it with people who have been doing it for 20. If you're been in the business for 25, grab some people that have only been in this industry for 5 years and ask them what they're doing, right? Like, it is important to get with each other, lift each other up, and understand that, look, we have to change. I love that. Do hard better. I love it. We are going to, I'm going to bring Greg back up here for this last part here. But at the MMBA here, we understand the rest of this year, it's going to be a tough year. And we want to continue to try to provide value for our originators, going forward. And we can do that through some of these programs. But I want to make sure that you understand that the people that are on this call here today, reach out. We're willing to help. Reach out to the MMBA. We're willing to help. what's next for our engagement programs. We're going to set some things up going forward. You want to know how to get involved, whether your company is involved in the MMBA or not. We're going to have some ability for loan officers to get involved on an individual level, something that we haven't had before. And so, Greg, I want to sort of kick it to you here to sort of wrap us up, and maybe you can talk even a little bit about what's coming up at NEMBC as well.
Perfect. Thank you so much, Ryan. And thank you so much to our panelists today for joining us and sharing some of their knowledge and some of their successes in this industry with all of you. Henry Ford, who created Ford Motor Company, an entrepreneur, I've read many of books about him, said coming together is a beginning, staying together is progress, but working together is success. And that's what the MMBA is all about. It's an organization to support all of us in residential lending. And we're going to encourage you to participate, to get involved. I'm going to bring up a slide in just one moment here to share with you. Just last week, we hosted Beacon Hill Day, where loan officers, as well as folks from all other areas of the mortgage companies, had the opportunity to join us in Boston and lobby on Capitol Hill to talk to our legislators about things affecting the mortgage industry. It's unbelievable the amount of bills that different organizations and groups will try to bring forth that would make our lives a lot more difficult. And they're pretty difficult already. One of the bills that we actually that was actually just sponsored and is up on Beacon Hill right now is a credit trigger bill. And we're testifying actually today. Debbie Souza, the executive director of the association, is not here today because she's testifying on behalf of all of us in membership. And we actually are asking everybody here to get involved as well. You can join MA, which is the Mortgage Action Alliance. It's no cost to you to join. It's free service. It'll take you a minute to register and another 20 seconds to send a letter to the representatives from where you reside, telling them to support this bill. Getting involved, getting your voice involved, shows that you're not only in this industry to profit for yourself, but to help all involved. As Ryan mentioned, we're having a series of these events as a way to hopefully encourage you to get involved, to show you value that we can bring to you. And these events are going to culminate at the New England Mortgage Bankers Conference, which is a conference for all 6 New England states. And quite honestly, people from all over the country come to this. It's being held in Portsmouth this year on September 12th, 13th, and 14th. And there's going to be a track just for originators at the conference. And we would encourage you to register, to attend, to come out and be face-to-face with your peers. We're going to have the head of FHFA, Robbie Crispin, is going to be doing a podcast live. Bob Brokesmith, the president of the MBA of America, is going to be there and presenting. It's well worth your time. If you're investing in this industry, invest in yourself and come to the conference. That said, thank you again to all of our panelists, and thank you all for coming. Please reach out to us if you have any questions. We're happy. And if you have suggestions for future topics, what you'd like to learn about, reach out to us about that. We want to provide the value that you need. With that, I'll end, and thank you for your time today.
Thank you, everybody.
Thank you all. Thanks for having me on. Appreciate it.